Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to go through Twitter, see what people are showing on social media. I'll interject my financial opinions as we go, generally related to three different topics: commodities, wealth building, and/or financial topics. So let's dive in there. Let's see what people are talking about. You want to follow me at Finding Square Finance, and if you want to join our community, finding-value.com, where we dive deeper into individual companies, sectors, and you get to see my opinions about those companies and when I'm purchasing them. We still have a coupon code LEAP going on, LEAP. So Brandon Bailu, he says, remember when copper deficits were 2025 and beyond problem? Well, not anymore. Refined copper moving into deficit in 2024, says Antofagasta CEO. Hotter commodities. It says a small deficit's emerging in the refined copper market, reversing consensual expectations a year ago for a relatively balanced market in 2024, according to the chief executive of Antofagasta. Michael says current treasury issuance exceeded the level since only during the deepest COVID lockdown. At full employment, imagine what will happen during next recession. The quarterly treasury issuance in terms of gross amounts, we are up above 2020 when we had that crisis. And look at how much we've got of quarterly treasury issuance going on. It is ballooning. And that's what is driving the increase in yields, is that is some of this here. Um, McGuire says that the Biden administration will likely need to tap oil from the country's emergency reserves to counter a spike in gasoline prices and amid inflation fears during the summer driving season. If true, the insinuating oil spike will be on the record books forever. So that's what some people are talking about and thinking, is that we could potentially tap into the SPR again due to an oil spike. And I agree. I think this summer we're going to get very tight on inventories worldwide. We're probably going to see the price increase, and then they're going to do something with the SPR for his election. Um, but I don't see a path for the world to dramatically increase the production of oil over the next 10 years. We might have some projects coming in, maybe 2025, but I think after that, it's pretty weak from what I see. Don says this is getting ridiculous. Gold is up $30 and silver is near 29 bucks. Yet the Huey is at 258. Until Wall Street buys a few miners, the retail crowd is going to wait. Well, you got to keep in mind China and India and a lot of these other countries are not buying mining stocks. They are specifically buying physical metals. And that is one of the reasons why I think people should hold physical metals, is because that's where the shortage is manifesting itself at the current time. Now, if metals get high enough and the margins start to increase for the miners, which I think is definitely possible, then the mining companies can make a bunch of money and buy back their shares and drive their stock prices higher if they'd like. That is definitely a possibility for uh, producing miners, where they can buy back shares if they want to. Brandon says, imagine the move in gold when U.S. investors start buying hand over fist. We will see multi-$100 intraday swings. It says U.S. investors shy away from buying gold. March sales for American Eagle gold coins were at the lowest since 2019. One thing I'll say there is, what if Americans are struggling? Maybe we're not going to be the buyers. Maybe the people in the East that are coming up will be the big buyers. India, China, stuff like that, where their wealth is growing, and ours, I think, is going to be. We're going to have a more difficult life, I think, and we're going to see it through the devaluation of the dollar. But yes, some Americans are going to go and buy physical metals, while others are going to have to sell it in order to maintain their standard of living until they deplete whatever they do own. Peter Schiff says Bitcoin ETF buyers who believe Bitcoin is a digital version of gold must ask themselves, why is GLD up 1.9% today, recording its highest closing price ever, while Bitcoin ETFs are down 5%? Maybe your thesis is wrong and you should sell your fool's gold and buy the real thing. I don't think Bitcoin is necessarily a digital version of gold. I do not think that to be the case. I don't even think Bitcoin is a commodity at all. Gold is an element on the periodic chart. Bitcoin is not. Bitcoin is designed by humans where there could be a lot of flaws in the design. But Bitcoin to me looks more or less like a measuring stick for liquidity, and it moves in tandem, it seems like, with the NASDAQ. So I would consider it a creation from technology, and I think it moves with the technology sector. So that's kind of my viewpoint on it, and the way that I view Bitcoin. I do not think it's an asset, me personally, and that's why I don't invest in it myself. Shanghai gold versus the COMEX gold, $2,400 versus 2,351 when this was posted. But that differential is what's driving the gold and silver price. It's the higher price over in the east versus the lower price in the west, and then money or gold in this case, real money gold, moves from the west to the east. It's a vacuum. Uh, Andreos says this is the scariest chart in global macro right now. So this is price pressures versus copper. Dr. Copper hints of a return to service price pressure. So this is ISM services business prices. It's going lower, but we've got copper moving in the opposite direction. What I'll say is maybe Dr. Copper is not Dr. Copper anymore. What if it's being driven by the supply constraints in copper? So the way that I view history is that we had, we'll call it like ample production growth and spare capacity throughout the world. So when the price of copper would go up, production was quick to respond, and we would have more supply quickly respond to that price. So really what was driving it was credit expansion. So as the economy picked up, credit would expand and it would put copper into a temporary shortage until the supply reacted to that shortage or that quote credit demand. But what if we don't have the supply of copper? What if it just doesn't exist? Well, then the prices of copper would go up irrespective of where ISM services would go. So I think that the relationship of a lot of these metals and what we use them historically could break those relationships. I'm not stating that every single relationship will be broken. I'm stating that some of the relationships with some of the materials that we use, and copper being one of them, could send different signals than what it did in the past based off of supply shortages. That's what I'm talking about. We've got weekly insider buying highlights, and these are some of the big buys in some of the smaller companies. So we've got Lavros Gold, Aftermath Silver, big insider buying, G2 Goldfields, Emperor Metals, Omai Gold Mines. I don't even know what that one is. Talon Metals, Lift Power, Abcourt or something, and Arizona Gold and Silver. Peter Schiff says, while gold is only up $7.50, which is 0.3%, silver's up 75 cents or 2.7%. The renewed strength in silver is bullish for gold. Bitcoin ETFs, on the other hand, are down 3.5% from Friday's close. Silver has way more upside potential than Bitcoin, but with far less downside risk. Well, I mean, we just broke the pattern on silver, guys. That's got a ton of upside. So I agree with that. technically he's right. Bitcoin, here's the thing with Bitcoin, guys. We don't know. Bitcoin was a creation in a technology boom. Technology started to boom in 2010, 2011 was the bottom. And then we started to boom after that. So Bitcoin has lived its entire life under a technology boom. What will it do if technology crashes, and how far down do we go? And what kind of ramifications does that have on the mining of Bitcoin, the miners? And what kind of fees will be generated to do transactions if Bitcoin mining is not being subsidized by the cost of Bitcoin? So that is really what scares me with Bitcoin is we've only seen it in one market condition, which is a recovery phase of real estate, which is also the biggest phase where technology takes off. Now, if we transition, which I think we are, into an expansion phase, which is basically underway as I speak, what type of ramification does that have on the price of Bitcoin? I don't know, and that's what I'm watching. Because if Bitcoin is part of technology and it does trade like the Nasdaq, and if the Nasdaq takes a nasty spill here, well, maybe Bitcoin takes its spill. But what if it never recovers? That I don't know, but yeah, we'll see. Here's Brandon. He says, well, the gold to Bitcoin ratio is turning up, potential bottom here. I think it's early to make that case because we haven't made a new high, but we did break out of this pattern to the upside. We have to wait to see a higher high and a higher low to basically create a new uptrend in the ratio. And that has not been created yet. Shanghai silver versus COMEX silver, the gap is widening again. They're up at about $32 an ounce, and we're sitting down at more like $28 an ounce. So there's a big gap. And again, I think this is what's driving some of the metal pricing. The East is sucking the silver West, and then the West, or yeah, is sucking it from the West, I should say. And then the West is like, hey, we're getting low on inventory. We have to let the price rise. I think that's what's going on, that they have to let the price rise at some point when they get through enough material. Goldman warns that long end rates may continue to rise as inflationary pressures reignite. And that is maybe one of the reasons why we're seeing the long end of the curve go up. Core CPI has been going up, and all of this inflationary pressures are pushing the long end of the curve up. And we saw that today. Stagflation could be on the way and would be a worst case scenario for real estate, warns JP Morgan CEO Jamie Dimon. So he thinks that stagflation would be bad for real estate. He says, Jamie Dimon says stagflation is a real estate's worst case scenario. That will filter through the whole economy in a way that people haven't really experienced since 2010. And that was the bottom. That was the recovery phase, was 2010. Andrios says, commodities are gaining ground against again this morning, which makes sense given one, the increasing tensions in the Red Sea, Straits of Hormuz, two, sanctions on Russia in base metal space, and three, an increasing supply chain pressure, in his opinion. I think that commodities have bottomed, and I think that the pressures are actually being applied by the demographic. All of this other stuff that people talk about in the news, I think are tertiary results from the master trend of the demographic. So during these types of times, they like to attribute all these wars and crises. It's like, well, here's the thing. All these wars and crises occur during these market conditions. It gives people basically something to blame, in my opinion. But it has turned up here in 23, 24. This guy says, I'm in Texas and my property taxes, insurance, and HOA are $3,600 a month. And the county just bumped my property assessment 10%. I've been looking at places in Thailand over the weekend. You can get a pretty sweet villa for half the price of my house. barely any taxes. Now I'm just looking at this. Property taxes, insurance, and HOA are $3,600 a month. I mean, when I look at mine and I don't have an HOA and my property taxes are less than this for my entire year. I paid $2,500 in my property taxes. And then my insurance, I think I paid about, I think it was like 3,000 bucks. So let's say it's 5,500 bucks. I'm just curious to see what I actually pay. So 5,500 divided by 12, I pay 458 a month. So he pays 3,600 a month. I pay $458 a month for my property taxes and home insurance. And that's the state of Colorado. You want to know? Brace for impact. China's 1.4 billion citizens are buying silver per government orders. Silver hits $32 on Shanghai Exchange, pulling prices skyward like a magnet. The enormous Western paper short positions, they're in for a wild ride as they cover, sending silver prices soaring. Yep, that is probably one of the main drivers is the physical demand. Russian metal accounts for 91% of LME aluminum stocks, 62% of copper, and 36% of nickel. So Russia accounts for more than 90% of LME aluminum stocks. Wow, that's incredible. I did not know that they were that high. SPX tapped the first target from the bear wedge. Here we are coming back down, and this could be a potential top. We'll continue to monitor it and see what occurs, but that does look a little bit toppy for me, and we could see maybe another pullback sideways action move out of the S&P 500, much like in 2020, what was this, 2022, I believe, 24, 23. This was in 23 that we had this big sideways move. So maybe we get a sideways move much like 23's. Patrick Karam says, if the S&P 500 priced in gold can't break to the upside, then watch out for a new US dollar bear market when the rollover completes. Please chime in any narratives you want as to why this can or cannot happen in the comments section below. So this is what it looks like. We'll zoom in on it. Try to get this in the picture as best I can. We've got a big bull market here from 1980 all the way up to the bubble in 2001. We peaked, rolled on over to the bottom of 2011. This move here is when gold outperformed the S&P 500. In my opinion, we've got a similar situation where this could fall all the way back down to the 1980 low. This here is kind of your big move up, and then you get kind of like an ABC correction, perhaps. Maybe that's the case. We have a similar correction here. This is an ABC correction. And I think that something like that could occur, where gold vastly outperforms the S&P 500, and we see a similar move, much like 1976 down to 1980. This could be a bigger one too. The reason I say it could be bigger is because we've broken the 40-year downtrend in interest rates, the 10-year specifically. So you can see the DXY goes up and then it goes back down. DXY goes up and then we break here. That's when the DXY could potentially go lower. Where that occurs or what the driver of that is interest rates and the Federal Reserve lowering interest rates because the weakness in the stock market. And then the dollar generally rolls over, commodity takes off, as does gold. Gold and commodity takes off when that occurs. And we're in the beginning stages of that alignment now. But the dollar continues to work its way on up at its current moment. And will eventually probably peak at some point. I don't know when that will be. We'll see it in the charts eventually. And then rates and dollar will go down, my guess. Oil prices in US dollars are likely to triple from here. And that, again, all of this ties with that dollar turning over and this ratio, the S&P 500 underperforming gold. And we've got a perfect alignment, I think, of Brent crude oil breaking out of the consolidation period here, coming above the resistance line and making another move to the upside. Brent crude oil, $200 to $300 is likely. Totally agree. We're going higher in crude oil over time. Brady's talking about the big breakout level for silver using the yearly time frame. And that price is $31 to $32 an ounce. It's not 38 or 50 like that on lower time frames. So as he's been saying, the blue tightening arrow pattern means a breakout is coming, and it is. A 45-year very bullish pattern. Let that sink in. It's a lifetime opportunity. So there's the big move. 31, 32 is what we're trying to clear and close above for a yearly closing. Massive cup and handle with a projected move of about $248. That's exactly what I get to, about 250 upward. And that's what I've got for today, guys. So we'll end it there. Give me a thumb up for the content, subscribe to the channel, and we'll see you guys next time. This is Finding Value.